Alright, so, what's up everybody? We are going to be going through a trade that I took today on NQ. Took a bullish trade. Why? I'll just pull this over real quick so we can kind of see what we're looking at. So, obviously on the M15, H1, anything, we are super bullish, right? So I'm very much of the opinion, don't short if we're going to the moon. The only thing that I was really wrong about was where we were in price, right? Did we take any form of liquidity? Absolutely not. There was no liquidity taken at any point. We had London low. 1 second. Right, so this is London low here. We had Asian low, which was down here. So we had absolutely no liquidity taken, and we're just pushing up. That should already be an indication that some form of liquidity needs to be taken. All right, if we're going higher, I would prefer for London low to get taken before going higher, and vice versa. So, so understanding that probably should have been looking short, especially since we were already at all-time highs and whatnot. So, yeah. Personally, I think I got a little lucky today. This could have very easily been a loss. What do I mean by that? Well, looking at price here in this area, you can see we get a very tiny sweep of liquidity here at 9:30. Push down, push higher, broke that, kept going higher. But then we get this candle in here. This one. Now, this bullish one to be specific. Boom. Now, when this candle printed, I was like, ooh, we should be looking short. But because my trading strategy doesn't account for order blocks, which is something that I was working on in terms of understanding when to take it, we can clearly see this is a sweep of liquidity here. Boom. We can clearly see this is a change in state of delivery the moment we close down, like so. Really truly, I was looking at this candle. I see this type of formation a lot. The moment you get a bullish candle, a bullish engulfing candle followed by a bearish engulfing candle, or vice versa, that tends to play out a lot. And I mean a lot. I don't know if I could see one. Where it's just one and one back to back. Here's one, right? Immediately close back down. Entry immediately, and we sell off. That would be a winning trade. Here's actually a prime example of the same thing. We push lower. We come up very strong. It's almost expected that we're going to continue that bullishness from that point. Do I have another example somewhere? Look, another perfect example. We have this bearish candle down. We have this bullish candle that comes up to like 90% of the candle. Expect to continue on up. You can see that was just kind of the start of it. Do I have another one? This one's pretty self-explanatory, but that's a very large candle. Okay, look, here's another one. Actually, no, this is the opposite. So this is the one that would probably cook to you. You get the bearish candle followed by the bullish candle. Here's another example: bearish, bullish immediately, and then you go on up. So understanding that is, especially in the context of where we were. So we swept buy side liquidity, like so. We swept the buy side. You see, we're at all-time highs. We get that like 99% close. That's probably where you should have entered to go short. And as you can see today, this would have been the top. You would have been selling at the top. Beautiful. intuition trade there. Unfortunately, I didn't take it. It's fine. That's what it is. So let's actually get on to the real trade, all right? And this is what I mean by saying I was extremely lucky. And why did I take this trade? So we came in to 930. We struck 930 lows. Like so. All right. We have a pattern, a formation that I like to see a lot. Bearish expansion candle, doji, bullish engulfing candle, and expansion candle with the inverse being broken. Like so. Where's my entry? You can see my entry is here. What? Yeah, entry is like that. Pretty much. Stop was below here, and I was targeting this high. Just targeted the high. It was 2.2R. So this is 2.3. So my stop was a little bit larger. Yeah, like that. 2.2R was the target. Yeah. So looking back, probably could have taken partials. Actually, yeah, probably should have taken partials here, but I went break even at this point, and then my brain was trying to think, and we pretty much came right back down. Something's not right here. Right. Yeah. It's like that. What the hell am I talking about? Yeah, okay, cool. So actually, once we came up here, probably should have taken, small partial, maybe take half the position off and let the rest ride, but I didn't. And we came back down, tapped break even, cool, whatever. No issues, no problem with that at all. Especially since really and truly I was wrong on the move of the day, right? And clearly very wrong. And that's okay. I think this is the first or the second time since coming back from vacation that my bias has been completely wrong, right? The other funny thing about this is there are actually absolutely no inverse trades on the 1, 2, 3 minute all the way down in my trading time. So if you look here, there's nothing, no trades, no trades, no trades, still no trades. Why would I not take this one? Short. Well, we did sweep liquidity. We could have taken this actually. That would have been stopped out. To me, that just didn't make sense. I want liquidity to be taken, right? And absolutely nothing. Still, and my time's up. So yeah, absolutely no trades today. On the 1, 2, or 3 minutes. So really and truly, it's not a good trade. I'm glad I took it because it's exercising the trigger finger. We had the criteria to enter, which was some form of sweep of liquidity. We're looking bullish, so go bullish. But in the back of my head, I was like, yeah, this probably doesn't make the most sense because we haven't had any form of significant liquidity get taken at all during this entire session. Not session, the entire day from Asia onwards. But yeah, that's the trade. That was a setup. And on to tomorrow. Tomorrow we have some PPI and a couple other things. So hopefully tomorrow's a good day.